Good afternoon, it's Adil Fazal here, market analyst for CFDs.com, bringing you a review of the FTSE 100 end of day. Be sure to visit CFDs.com for your trading needs. It's a specialist in spread betting and CFD, so certainly open up an account there if you so wish. Also, with regards to educational side of things, you can certainly visit www.cfds.education to certainly learn more, and be sure to keep a lookout for the new app that's going to arrive and make trading in terms of information and news flow much easier. Okay, right, FTSE 100, where art thou, FTSE 100? Okay, so where art thou headed, should I say, FTSE 100? Okay, so let's try and decipher things here. European markets themselves overall at this juncture, looking at the actual indexes, overall finished negative, and I've actually finished weak. That is a concern. If you are a bull, you should be very concerned right now, given the fact that the Asian market certainly closed higher. You had the Shanghai and the Nikkei higher overnight, and obviously US markets surging late in the session yesterday, with the Nasdaq obviously hitting the 4460 region, and obviously the S&P today has hit the 2040 region and was basically hovering around that region overnight as well. Okay, so there's no follow through. One of the other concerns as well with regards to the FTSE, given the fact that it did finish flat, it would have finished weak had it not been for InterContinental Hotels Group, which was actually up by 6%, I think, at one point, even 7%. One of the world's top hoteliers surged 6.9% after saying it was confident in its outlook for the year due to encouraging trading trends and after posting growth in its third quarter, etc., etc. UK, Germany, US all remain strong. Okay. Whitbread also saw strength in its hotels business, combined with its Costa Coffee brand. Certainly profits rose by 14%, so that obviously underpinned and certainly helped the FTSE 100. Adding the fact that we also had another company that actually reported positive earnings as well, if I can recollect correctly now, if I have my data here just to remind me. ASOS, yes, ASOS certainly was certainly up a good 6% after reporting a 1% rise in pre-tax profits. So earnings certainly helping the FTSE 100, although the European market certainly was certainly bearish, and they were certainly putting pressure on the FTSE, given the fact that we've had the loan growth or credit growth, credit data. Basically, we had information regarding European lending. So we had an abrupt reversal in fortunes trade, dropping into the red after a positive start when a bank lending survey from the European Central Bank showed credit conditions improved for the 6th consecutive quarter. And since the ECB President Mr. Draghi is talking on Thursday, it basically puts puts that into jeopardy. Current QE program is working, potentially pares back the probability of an extension of it. So that's certainly the equation now at present, where bad news equals good news and good news equals bad news, because everybody wants the QE party to continue and the Kool-Aid obviously to continue to be poured into this market. That obviously isn't the case with the FTSE. As you can see here, daily chart now is certainly looking overbought. Okay, let's just quickly cross-reference our FX pairs that are very important. As you can see here, the Aussie is certainly finding weakness, and given the fact that the Kiwi has dropped quite substantially, given the obviously global dairy trade auction certainly came in negative, so that certainly is flushing quite substantially. Now, Miss Yellen has spoken, and she did not mention anything regarding fund monetary policy. So the markets certainly are, even though having said that, the S&P 500 is now finding weakness. If I just bring up the chart of the S&P 500, because that will dictate sentiment, and I'll explain why the S&P 500 is important going into tomorrow's session. Okay, as you can see here, first of all, the weekly chart of the S&P 500, you can see that we're putting in a doji exactly at 61% retracement. Okay, and that's exactly where previous support equals resistance. Okay, so that is considered to be a potential resistance barrier. The daily chart on the S&P 500, as you know, is a diagonal trend line resistance, and you can see here previous support equals resistance, and that's exactly where we're seeing a topping tail on the S&P 500. Okay, so it's not a coincidence that the FTSE has been languishing, or European markets have been languishing when the S&P 500 is obviously into resistance. Looking at a 60-minute chart of the S&P 500, you can see that yes, we did hold the key 2020 region, but the rally above there has been circumspect somewhat. So it's certainly looking like it's on the verge of collapsing, and this whole move higher has been nothing but a fake out. Again, I mean, I'm quick to obviously rush to judgment here, but my analysis of the situation right now certainly is not positive. Okay, the other indices that I'd like to show you as well, which I've not actually included in here, which I will for future videos. If I just bring up a chart of the VIX, VIXY, if I can remember correctly. Here we go. Okay, yes, this is an important chart. Let me just save this to my templates. Okay, these charts are brought to you by ProRealtime.com. It's a monthly charting package that cost me around £200 odd. So certainly, if you are interested in these charts, then be sure to go to ProRealtime.com. Let me know if you do wish to subscribe to ProRealtime.com charting, because I can negotiate a discount for you. Okay. Let's go again. Okay, so the VIX, as you can see here, potential support. Okay, so the VIX is coming into support, previous resistance equals support, gap fill support, and that indicates that the fear index is now into support and therefore is looking for a potential move higher. Okay, and a move higher in the fear index, as we all know, means obviously a risk-off scenario, and for US equities to certainly pair their gains. Okay, right, so those two factors put together, going back to the S&P 500 now, going back to the 10-minute chart, sorry, that's 60-minute chart. The 10-minute chart, we are now putting in a potential reversal. As you can see, we pushed higher 2040. Ever since then, we've failed to continue our gains. Okay, the market is currently in higher highs and higher lows, but it's certainly in danger of a key and important reversal. Okay, we're looking at a nice right shoulder here, and then the market certainly selling off quite substantially. That's what I'm expecting. Don't be surprised if you see or witness 2025 on the S&P 500 and potentially 2022, 2024, and ID 2020. Okay, if we were to project this HNS that we're witnessing at present, and obviously the lack of a higher high now, obviously we are looking at putting in a potential higher low. Okay, or should I say a lower high, sorry, should I say. So we are looking at a potential pivot high of 2038. The neckline is around 2028. So you are looking at 2018 on the downside. Okay, so that's certainly your projected target on the HNS formation. Now, if the S&P 500 is now bearish and looking very top heavy, then what do you think is going to happen to the FTSE 100? Okay, and given the fact that the volatility index as well on the FTSE itself, on your daily chart, on your 60-minute chart, you can see here building a base. Okay, so we are building a very, very important base on the actual volatility index for the FTSE 100 to potentially thrust and move higher. Again, looks like a inverted head and shoulders formation here again, potentially brewing. Okay, so right shoulder, then obviously off we go to the races. Okay, so it's very, very important. The FTSE all share certainly, again, ever since we held that resistance zone, it's certainly finding weakness. FTSE 100 Euro top 100 again finding weakness, finding resistance. FTSE Europe itself daily again finding resistance. So everything is confirming. The FTSE 250 again, you can see here on the daily chart, ever since we put in that topping tail, we are looking at resistance. Okay, and now the dollar index as well, very important. We are potentially breaking out. We're putting in a bottoming tail here. We just delete this, not delete the TMA and delete the pivot points. Okay, here we go. So let me just save this. Okay, so the 200 MA, and you can see the bear flag on the daily chart on the US dollar index has not played out at all. I did mention that we had an unfilled gap above, as you can see here, and we are looking at attempting to close and bridge that gap. So certainly looking for a thrust or a potential move higher. You can clearly see that we have an inverted head and shoulders formation now. So this is your head, or should I say your neckline, and obviously that off we go to the races. So you have an inverted head and shoulders, and again it's all about closing the gap above. Now, Miss Yellen did speak today. She didn't have anything to say in terms of monetary policy, how we interpret that. It's hard to really come to a conclusion, but given the fact that all the market is certainly priced in all the dovishness to a large extent, and certainly is looking for a potential excuse now to short squeeze higher, especially given the reaction in commodities thus far. If I bring up the chart of oil and copper now, as you can see, the Aussie and Kiwi are certainly into support, or certainly into resistance, and certainly reversing now. Zinc itself has been weak ever since. Glencore has been weak. Emerging markets certainly are stuck into resistance and not really pushing any higher at present. Again, if I go back to copper, this is a chart that I did share with you yesterday. You are seeing a potential move lower, thrust lower so far, and no real sign of strength from copper. Therefore, an argument for it to go lower certainly remains strong. If I bring up a chart of oil, here we go. Crude oil, as you can see here, we've had a flush, quite substantial flush, and certainly still languishing at the low. So no real movement higher. So an argument certainly has to be made that this is obviously looking to potentially thrust and move lower. Okay. Again, going back to the FTSE 100 chart now, going back to your daily chart, as you can see here, we certainly have exhaustion. Previous support equals resistance 6430, and we really haven't cracked that resistance zone as of yet. We're putting in a lower high now on the, or we have put in a lower high on the FTSE 100. The key diagonal trendline resistance has certainly been respected and held thus far, so no new higher high. We've put in a lower high, and the trend certainly remains bearish from my perspective. Having said that, we did put in a potential double bottom, and that was only due to Whitbread, ASOS and International Hotels Group. Bear that in mind, folks. Okay, if it weren't for those stronger earnings, the FTSE would have been flushed as well, because commodities were down quite hard. I mean, as I talk, copper is still selling off. And like I explained, the S&P 500 has a H&S formation. So if I go to your chart, or if I go to the chart of the S&P 500, you can see that we have this very bearish pattern. Okay, that there certainly looks like a potential top. Okay, from my perspective, I can cross-reference that with a Russell, but I'm not going to do that. I'll leave that for the US market analysis. Okay, the Shanghai, as you can see, into that fib 50% resistance, so certainly looking for exhaustion and pullback. And the Nikkei itself is languishing, even though it did actually finish higher on the day. It's still relatively weak. Okay, so no real thrust or movement higher on the Nikkei, especially with regards to no easing going forward, etc., etc. Okay, we did have Mr. Carney speak today, and his comments were slightly on the hawkish side as usual, and that certainly is obviously hurting sentiment on the FTSE 100. The global dairy trade auction, obviously that certainly doesn't bode well for commodities in general, given the fact that the milk prices certainly dropped again, and that doesn't bode well at all. Okay, the latest appears to be trapped in a symmetrical pattern. If I can go, Fonterra GDT price index falls 3.1%. So again, agriculture, commodities, etc., it certainly does not bode well going forward. Okay, now the FTSE 100 now, let's go to the technical formation. I think I've talked too much here now. So going to the FTSE technical 60-minute, again, like I said, lower high, diagonal trend line, support, your resistance zone for the FTSE 100. You have resistance here at 6370, resistance at 6400. Watch out for those zones. Okay, support obviously will be at 6320 for the FTSE. If that cracks, then you are looking at 6270 for the FTSE 100. The H&S formation was complete, which I discussed over, well, I have been discussing over the last few days. Again, if you do want to trade these setups, then I would encourage you to join the live analysis service, and that's where I obviously discuss this live setups, live trades. Currently, I'm 112 points so far on the live analysis service this week, and last week I finished with 360, 370 plus. So again, it's 400 points in the last 6 trading days. So be sure to join the live analysis service if you want live trades, live setups, and commentary like this throughout the day. Okay, so H&S formation, obviously the target was hit at 6320, which was the pivot high, 6405, 6365. We'll give you a target of 6320, and that's exactly what we hit on the downside. As soon as we hit that, we obviously short squeeze and reverse, and that's exactly what you're witnessing at present. Okay, so again, resistance zone in that 6365, 6370 zone. Okay, use your Fibonacci retracement, take it from the pivot high to low, and you'll know that this key to resistance at 6355 is going to hold. Again, we'll test that 6320 level. Given the fact that US markets are into resistance and certainly remain vulnerable, don't be surprised if that 6320 were to crack, given the fact that oil prices are now making a new low. If we do break the 6320 level, then you know the next support zone is going to be previous resistance equals support at 6315, and then you do have some support at the 6285, and then the ultimate support at 6270 for the FTSE 100. Again, let me just go to a 10-minute chart. Sorry, let's revise that again, given the fact that I observed sales. So 6315, and then obviously you have support here at 6285. And 6320 should hold given Whitbread International Hotels Group, and obviously we have ASOS earnings as well, certainly underpinning the FTSE. I think that's a wrap with regards to the markets, folks. I don't think I've missed anything in terms of the FTSE 100. Again, going into tomorrow, no real important market moving information other than home retail group earnings tomorrow. Japanese exports and imports will be interesting overnight, but no real US, European or UK data to sway things in terms of risk. That's finished. That's it. I think that's done, folks. Have a good trading session. Again, like I said, US markets are weak. Potential top on the S&P 500. H&S formation is playing out as per my analysis in this video, and you are looking at 2027, potential 2025 and 2020, etc. on the downside. Trade safe, adhere to good risk and money management always, and be sure to visit cfds.com. Goodbye now.